Fellow traders, welcome to my channel. Today we will be looking at master market structure and substructure. We will dive deep into break of structure, market structure shift, change of character. At the end of the video, we will be able to master how to use market structure in your analysis. So let's look at what market structure is. Market structure is simply the foundation of price movement, the roadmap of price movement. How price moves is what we regard as market structure. As we know, we have three ways price moves. Either price is in an uptrend, a downtrend, or a sideways market, which we normally call a ranging market. And how we determine where the price is or what direction the market is going is based on key concepts, which are mainly a break of structure, a market structure shift, change of character. We also have substructures, which are mini trends in the main major trend. So let's look at how we can identify an uptrend, a downtrend, and a sideways market. In this diagram, we have an uptrend here. How do we determine an uptrend? An uptrend is determined by when the price is making a higher high and a higher low. As you can see, price started moving from here to this point, creating a high, then price retraces back, then create a low, a higher low, a low that is lower than this low. Then price breaks this point. As it broke this point, it creates another high. When price creates another high, it pulls back and creates a low that is lower than this low. Then price has to make another push in the upside and still break this higher high here. This is what we regard as an uptrend. Then in the downtrend, it is vice versa. Price started moving from this low here to forming a lower low. Then price has to pull back to create a low that is lower than this high here, which we call a lower high. Then price has to retrace to move quickly and break this point here. When price broke this point, it forms another low, another lower low. Then price pulls back once more to create a low, a lower high, a lower high. This lower high here is lower than this one. Then price has to swiftly push downwards and break this point here, then keep going down. In this scenario, we regard this as a downtrend. On the other hand, there is one we call a sideways trend. This sideways trend is when the price is not moving in a specific direction. You see price moving in a particular range. We know at times price can come here, break this point here, even we have to retrace it back to this point. So price will keep making this move till it breaks either up or downside. in this kind of market, there is no clear direction of the price. Most times it is very advisable to wait for price to break this range so that we can know the direction the price is really going. So we will now look at how to identify this price foundation, these market structures. We will be looking at break of structure, what it is, how does it happen. We will be looking at market structure shift, change of character. These things I mentioned is what will help us to determine whether we are in an uptrend, a downtrend, or we are in a sideways trend. Break of structure is simply, by definition, a break in a key level in a trend, which signals a continuation of the trend. Whereas a market structure shift, on the other hand, is when a price breaks a key level in the opposite direction. Is a signal of a potential major trend reversal. A change of character, normally some people call it a market structure shift, but on the other hand, it is a first sign of change in direction of the trend. It mainly occurs in a mini trend when the price is trying to change direction. So typically it occurs mainly before market structure shifts, and it occurs on substructures anyway. So let's take an example. Let's look at this example. This is an example of how price moves. Let's start from here. Price started moving from this point to this point, creating a higher high, then pulls back to form a lower low, then break this point to form another high. When price breaks this point, we regard this as a break of structure. A break of structure. As you can see, price broke it with momentum, high momentum. Then it did not just break it and retraces back, it broke it and moved up, form a higher high, then has to pull back again, forming a lower low. In this kind of scenario, we will say that we are in an uptrend. Then price has to break this point again. This is another break of structure. Price move up to form a higher high, then it has to still retrace. Then what happens here? We have this point, which is the main point that price originated, that the move originated. This is the point. This low here is a point in which the momentum started. It was used to break this point here. So this becomes a major swing point at a key level that must be broken before we regard it as a major market structure shift. So price has to move to this point, then pulls back and form a low here, a higher low. Then price still moves to this point. Instead of price taking out this level from here, this high here, it fails. The momentum fails. The sellers gain control and broke this level. and broke this level. This level is what we call a change of character. A change of character. It can signal a potential change in the direction of the trend. So when price pulls and breaks this point, it gets to form another low, and it still moves up from here. Then it still fails to take this high here. It still broke this point, which is called a break of structure here. Then once I form this low, and this low here, price moves and take this high. What happens here is a substructure, a structure inside the next structure, because here is the major low, here is the major high. As you can see, price did not take this low and it did not take this high within this move. If price has moved and took this low here, we would have said that we have a major market structure shift. But nothing like that happens. Price has to come to this point, break this structure with momentum, and create a new higher. We are still in an uptrend. But in this kind of scenario, you can still trade it in a lower time frame. Assuming this is a 4-hour chart, this particular move is a major move in the 15 minutes in a lower time frame. This is a major downtrend in a lower time frame. So that is why we say it's a substructure. A substructure in a higher time frame is a major trend. It's a main structure in a lower time frame. So price broke this point, form a high still, pulls back to this point, and still break another high. Here is still a break of structure. Then this point here becomes our key level. As you know, from here, when price use this level to break this point, that level the point uses to break this level becomes our major key level. Or if price have moved down from a high, maybe that low forms a higher low, that low would have been the key level. So here now is our key level. So any break in this point, we will regard it as a change in direction of the trend, which is a market structure shift. So price formed a higher high here, then moved down. And what did price do? Price broke this level here. What does it signify? It signifies a potential change in market sentiment. That market is telling us that it is no longer going up, that there is a potential shift in the market sentiment, a change in character from an uptrend to a downtrend. Then in trading, we have to wait for many other confirmations before we confirm that really the price is heading to a downtrend. So here, after market shifted structure here, it forms a lower low. This is a higher low. This is a lower low. Then price pulls back, form a lower low, then move, break this level, break of structure, then traces with momentum, then to this level, pulls back again and continue downwards. From this example, we must have understood what break of structure is, what change of character is, what substructure, and what market structure shift is. Let's look at substructures. Simply, this is another diagram to illustrate a substructure. As you can see here, from this point, the price is making a higher high and a higher low, breaking structure here to this point, still break structure here, then move to this point. Then price, this low here and this high here becomes our key level. So price has to break this thing, this level, before we consider it a major market structure shift, a change in sentiment. So price forms a low here. This low here could not break this high, Instead, the buyers here lost momentum and sellers took control and break this level here, which we call a change in character. Then it moved it to form a low here, possible taking some liquidity, balancing some equilibrium as well. Then markets from this low here makes a new high. Then from this point, it traces from this point, then break this structure. Here now is the highest high that the price. Right. This is our key level. This is our key level. This is a low, the lowest point the price moved. And this lowest point is the origin of this break of structure. This becomes our major point for this price movement. Inside this, what happened here? Since price did not take out this high from these points, it did not take out this low from this point. This is what we call a substructure. A structure inside another structure. Although in those scenarios, if we are trading in the direction of the major trend, whatever that is happening here, our trade will still be bullish. Our buyers will still be bullish. But since we have seen a change of character here, which is a potential change in the direction, we can still switch to lower time frame and trade it as a downtrend. But in this kind of scenario, you have to consider your risk, your exposure to risk and everything till your price break this point, then move to confirm a major shift. So all these things that happens here are substructure movements. So let's continue. Price takes this point to this level. Here is another break of structure that we discussed before. Price moves lower, break this higher low, which we regard as a major shift in market sentiment, market structure shift. Then to the downside, now we are in a downtrend. Price comes here, break structure, then retraces back. Here is our major range, a major point. Then here is our major low. Then this, what happens here is price don't always go straight. Price has to make some set movement to get to this point. Whatever that is happening in that move before that low is what we regard as substructures. So when price comes to this point, what happens here? This is a liquidity sweep. If you go back and see how price broke structure here and structure here, we always see a momentum in the break. Price has to move, break that structure with a heavy push, most times a long candle that has a fair value gap in it. Then price breaks it, then we consider it as a break of structure. But here we probably see a price breaking this range with possibly a candle wick. This is not a valid break of structure, it's a liquidity sweep. It's a scenario of trying to deceive traders into thinking that there is a major change in market sentiment here. But that failed, and what we see here is price have to move down this momentum and break this major structure here, then move down. Now what happens here? Price has to retrace again, then this is a particular structure. From this point here now, price has to move swiftly and break this major high. You see this break is a valid market structure shift. We are now saying that we are moving back to an uptrend. So this is how market structure works and how you can use it to maximize your trading. So let me explain the valid break of structure and an invalid break of structure. This can still be a market structure shift or change of character. Here you can see price moving upwards, breaking structure with big displacement, with huge displacement. That is what we call a valid break of structure. Price is breaking this structure with very huge displacement. So in this scenario, we regard this point as a valid break of structure. What happens here? Let's say price moves this to this high. This break of structure here is a valid one. It's a valid one. Then price comes to this point. Did this break structure here? No. It swept this liquidity. It swept this liquidity. From this point now, price is supposed to displace this level before we call it a valid break of structure. Here, it swept this high here with probably a wick or a small body closure. Here is what we call a liquidity sweep than a valid break of structure. Automatically, here, this point still remains. This point cannot be classified as a major key point because it did not break this. It did not break this level. We did not have a valid break of structure here. What we have here is a liquidity sweep. So we did not have a displacement here. This point cannot be regarded as a valid key level. So we still regard this place as a valid key level. So what happens here? Price came down, break this level, take this level here, then which we will regard as a change of character because automatically here is our substructure, a kind of our substructure. So what happens here? Price break this level, signifying a possible change in the market direction. Price has to displace with a high momentum, break this level here, which will confirm our change in market sentiment to the downside. So with all this, you will be able to master what valid structure is and what invalid structure is. This is a live example of charts to illustrate market structure analysis. As you can see, we are on the 4-hour chart of British Australian dollar. I have these markings to help you understand what I have taught so far about change of character, break of structure, market structure shift, so that you will understand the valid break of structure, valid market structure shift, and liquidity sweep. So starting from here, we see price has been in an uptrend, make a high here, boost back, make a low, break of structure here, then to this point. This was a major swing point that the move originated from. From there, price pulls back, and what do we have here? A break of structure. A break of structure, a valid market structure shift. A valid market structure shift. So, what makes this market structure shift valid? We have a very big displacement here. We have a very big displacement. It breaks this point, then you can see from the second candle, though it was a bullish candle, but this candle did not close above here. That is the way I analyze these moves, because assuming we have this candle retracing back to close above here, I will not consider it as a valid break, or as a valid market structure shift. Here what we'll see is that this candle closes below and it continues going down. So the market continues going down, form another low here. From this low, it moves to form a lower high here. When the market formed a lower high here, this point becomes our major low. It moves down. We have a valid break of structure here. As you can see, we see the first candle, the second candle, two of them are big displacement candles. The break points till they form a major low here. That is a valid break of structure. Automatically from here to here, we can confirm that we are in a downtrend. Then here becomes our major low high. This is a point, is a key level that the market has to break for us to consider that we are entering in a uptrend. So what happens? Price comes back here, started pulling back, and what all these things that is happening here is what we call substructures, because these two places are our main key level from here to here. They are our main key level. Until we have any break in any of this level, then we can know whether we are in an uptrend or in a downtrend. So market started retracing back. This is substructure. We have a change of character here. Then what happens? Market first went to this level, swapped liquidity. You can see there is no body closure here, neither there is another candle to confirm it. What we have here is a sweep, a liquidity sweep of this high. It retraces back, then comes back, then with big momentum, a big candle closes and another one still closes above. Automatically, we can confirm that this is a valid market structure shift to the upside. Now we are in a bullish trend. This becomes our major low. This low must be taken before we can say we are in a major downtrend again. So from here, market forms another high here. Here. So as it forms another high, it breaks structures to this point. This is a valid break of structure here. This lowest point this lowest point now becomes our higher low. It's a major low, it's a major key level. If price break this point, then we will consider it as a market structure shift. So before price broke this level, we have a sweep. Initially, this level was our key level that the price needs to break before we consider it as a record structure. But instead, price went to sweep this level, retraces back. So this is not a break, this is a liquidity sweep. So price keeps going, keep moving till it forms another high. When price forms another high here, it pulls back. Note, this is our main level here. This is our new key level here. When it pulls back from this level, then price break this point here. It did not sweep it. You see it's a candle here. You see another candle here. This is a valid break of structure here. This is a valid break of structure. Price broke it. Then automatically this point that this move originated from becomes our other key level that price has to break for us to consider it as a market structure shift. Then price break it, then form another high here. This becomes our new major high. Then price has to pull back into this area, pulls back. Then from here, price still moves to break this level. Here now is another major level. This point here is another major level for us that price needs to break for us to consider it as a valid market structure shift. Remember, as price is doing that, we are in this place. We can say that we are in a substructure. We are in a minor trend downwards. We are in a minor trend. Despite that, we don't have a clear movement here because we are having candles with wicks. It is not clear. Most of the time, it is advisable to stay away from this kind of market. So what happens here is that our bias is bullish. Most of our entry will be bullish. So at this level, price comes move rapidly, sweep this place, then move up. This candle with high momentum. This candle comes with high momentum, but we notice one thing: it closes above this point, above this level here. But what happens in the second candle? The second candle opens and move as fast as possible back into this level. That is why we call it a failed break of structure. You know, in the market, nothing is 100%. You will experience this as you keep analyzing your market. We call it as invalid break of structure or a failed break of structure. A valid break of structure is one that when this candle closes, or we'll see another bullish candle possibly closing here, or maybe if it's a bearish candle, a tiny bearish candle that did not close inside this way, then maybe the second candle will be the third candle will be a bullish candle. So that is what we will use to confirm a valid break of structure or a valid market structure shift and differentiate them from liquidity sweep. This happens, it failed, then came back here. What we experience here is a liquidity sweep from this level. Then this is where we have a real break of structure here. You can see break this level here, take this level, we have a valid break of structure here. Then this low is where we will say the move originated from. This move originated from here. This becomes a major low that price has to break for us to consider it as a market structure shift. This becomes a major high that price will take for us to consider it as a break of structure. So what happens here? Price pulls back with big momentum and displacement. It breaks this level, then the second candle, we still have a tiny second candle, a tiny bullish third candle, then this big bearish candle here. Automatically, this is a valid market structure shift to the downside. We are in a downtrend now. So let's see what happens. Price has to pull back, pulls back, maybe taking some liquidity here, then it continues. We see another break of structure here. But before that break of structure, there is a liquidity sweep. Price tried to break this level, but it did not work. Our price retraces back and came back and break that level. So we are in a downtrend till market takes this lower high here. Till market take this lower high here, we are in a downtrend. I'm not saying that we cannot treat an internal structure as a substructure, but the probability are always higher when you trade in the major direction of the trend. Like here, this is a pullback. On the 4-hour chart, this pullback is a major trend on the 15-minute chart or the 5-minute chart. So price comes back, pulls back, try to reach out to this low here, but it failed. Then price has to go back again, take this point. What we have here is a change of character. This signals that a potential shift in market sentiment. That is buyers are trying to take control. So we can still be looking for bullish signals from here, from this point. We can still be looking for buy signals from this point. So price break this point, pulls back into this range, form a low here. From this point, we see price moving here with big displacement, heavy momentum, then breaking this point. We now have a valid market structure shift. This point, what happens here to this point is a substructure, an internal structure, a mini trend that can still be traded on a lower time frame, especially when you start seeing this change of character. A change of character, unlike some market structure shifts and change of character. If we see a closure here, a bullish closure or a bearish closure, we can consider that a change of character. Then we'll have to wait for other confirmations before we can enter that trade. We must wait for other confirmations. So when markets shifted structure here to the bullish side. It pulls back to this range, then form a low here. Then this low originated, broke this structure here. Valid break to this point. Then this place becomes our major low. So this place now is our major high. Markets pull back, form another low here, broke this point. This is a valid break of structure. Market still comes back to this point, form a high, return, pulls back, form a higher low, major key level, break structure here, and valid break of structure. We can see body closure here. So we can see the second candle closed here still. It's still valid, but in some cases you might leave it to get a clearer picture of that. But to me, it's a valid break of structure. So market retraces to this point. This point becomes a major low. Market displaces with big momentum, big move, break the structure here, move all the way up here. When market reaches this level, it started ranging. This is what we call a range market. Market has no clear direction. It's ranging, candle moving up and down. So what happens here? After this moves, market has to drop. Remember, this is our key level. Market has to drop from this zone. When market broke at this point, at this place, at this area, it first swept this level. Then we have a valid break here. This is a minor break. What we regard this as a change of character. Automatically, we can say that we are entering into a bearish scenario. But until we confirm this major break, this place can still be traded, but we will be very, very careful by trading it. But we are entering into a bearish market. So when market comes down to this place, we have some moves here which we consider as our substructures. Market forms a high here, come to this place. We have a break of structure here, BOS, which we represent as smaller letters because it's also structures. Comes to this place, try to break this major level but failed. What we have here is a liquidity sweep. It comes to this level, then it fails to take this level, still pulls back, come here and swap another liquidity. And then swap another liquidity. The market comes here, break this level. This is a change of character, but it's a failed change of character. It's a failed change of character. That is why I always say trading in the direction of the major trend is extremely important. So it's an invalid change of character. So remember, this remains our major high here. So price has to move back with big displacement, test this low here and break this level. Automatically this becomes a major change in the market direction. We can now say that we are in a major downtrend. So when price broke it retraces, form a lower high here, then break another structure. Before breaking it, price swept liquidity. This is a valid BOS. You see the two candles. It is very, very clear. I will always tell you to stick to something that is very, very clear when making your trading. So markets move down to this place, forms a low here, but this is not clear. This is not clear. Automatically, I will say this is a range. This is not clear. Price move to this level. So price originated from here, move to this level. Then we have a retracement, a visible retracement. Then price creates a major lower high here. This lower high here broke this structure. It break this level. This is a break of structure, valid one. See, you see the two candles, they are very clear. Then price has to retrace. We are having a internal move here. So we get to this point. It still break another structure here, valid BOS. Then this point now becomes our major lower high. Price must break this level for us to consider it as a major market structure shift. So from this point, price started moving inside. We have a change of character here, signifying that we are possibly entering in the direction of in a bullish direction. Price with momentum broke this level. You can see these two candles, even the third candle was still bearish, but all of them closes above this level. So this is a valid market structure shift. So from this level, price pulls back. Automatically, this becomes our new key level. Price pulls back. Then swept this high here. Liquidity sweep. It traces back. Fell. Break. Still swept this high here. Then pulls back. Then with this level here, price broke this structure, broke this level. This is a valid break of structure. It's a major valid break of structure. Automatically, we can say we are still in a bullish trend. This is our major level. What happens here? Price moves back to this place, then move up. As you can see, we are still considering that we are in a bullish trend. Moves back to this level. Is there a valid break of structure? No. We see that this candle closes above this level, but the second candle opens, then closes inside this range. This is a buy side liquidity sweep. It's a liquidity sweep. It's not a value break. Closes it because it swept this liquidity. This is not a break of structure. Automatically, we will wait for confirmations. Then price still keep coming, comes to this point. We still experience the same scenario. Price tried to break this major level, but failed. We see this long candle. It closes here, but the second candle opens below, then closes inside this range. This is a liquidity sweep. When you see this second candle moves back to the range and closes, it is a liquidity sweep. It is a liquidity. This candle swept liquidity. This candle swept liquidity. If you are trading possibly the candle rate theory, you will understand what happened here. This is a perfect candle range theory. Price comes here, creates, swap this liquidity, manipulate here, then move back to the range. So price comes to this point, then automatically here in this place, we will say that this market is not moving in a particular direction. We are having a kind of a range in this box, okay, in this box. So market swept this liquidity, comes here, then this is where we have a valid market structure shift. You remember this place was a high, liquidity swept here, this place is a low, for market break it, we have a major market structure shift here. So when we have this major market structure shift, price reach to this low, start making some retracement, some pullback. We have change of character here, we have break of structure here, break of structure. This is an internal structure, it's not structure. Till it gets to this point, till it gets to this lower high, where we have a valid market structure shift. We have a valid market structure shift. Price is trying to enter in an uptrend. So price, we consider that we have entered in an uptrend here because there is a major market structure shift. So when price like this becomes our major higher low. When price get to this major high, price retraces but fail to take this level here, moves back, form another lower high here, then comes back, swept liquidity without closing, this is not a valid market structure shift. It's not a valid market structure shift. Price continue doing that, Here price is moving without any defined direction. There is no defined direction on the market. It came straight to this level. What do we see here? We see this is a liquidity sweep. From this candle closes below this point. Then what happens at the second candle? The second candle opens here and closes inside this range. Then what happens? The third candle still opens, closes below this range. The fourth candle opens, moves back to this range. This thing is not a valid market structure shift. It's a liquidity sweep. For the fact that the second candle closes inside this range, then the second candle have to drop, sweep liquidity, and sweep another move down. Then if this is a valid sweep, we will expect this fourth candle to still move down, possibly, or maybe close in the middle of this candle, then another one to open for us to maybe we'll see multiple candles to confirm that this is a valid, but instead it moves back into this range and continue up. Then it goes to this level, swap liquidity, comes back to this level, still experience the same thing. This candle closes here, but this candle moves. This is also a liquidity sweep. It moves back, then continues to we have a valid market structure shift. What is happening here is that with all this thing that happens here, to this point, if you look at it very well, we are in a range. It is very important to understand when the market is ranging so that you can position yourself in the best position to know what to do. Either to stay out of the market or maybe to trade it if you have a strategy or a pattern that will help you analyze and perfectly trade a range market. Otherwise, it is advisable to stay out from the market, or you can move to a lower time frame and spot a move on that range. But most of the time, when the market don't have a clear direction, it's mostly not predictable. So you mainly experience much losses. So if you are a kind of trader that trade this kind of market, I will advise you to like manage your risk very, very well and trade it. So this is a an explanation, a detailed explanation of how market structure works and how market structure is. You can take your time to go back and study what I have said in this video. Possibly go to your live charts and backtest this. It is very, very important. Market structure is very, very crucial in every trading that you're making. Thank you so much.